So how will rapid response work for you today? Our format allows you to engage professionals with your questions. We are streaming both on Zoom and Facebook Live, so do feel free to utilize the Q&A features on either platform. Tereya and I will go ahead and make sure we monitor those so we can ensure your questions do get answers. Thank you so much, Mark and Aaron, for both joining us today.
You bet. Thanks for the opportunity, Joey.
Sure, it's our pleasure. We know there are going to be a lot of questions ahead regarding loan extensions and forgiveness. So let's just go ahead and jump right into our rapid response Q&A. Mark, could you take a few minutes and speak with us about any updated information from SBA regarding the new rules surrounding the PPP loans, shifts in timelines, and percentages?
Absolutely. Thank you, Joey. And maybe before I even jump into the forgiveness piece, I just want to take the opportunity to let folks know that if you haven't yet applied for a Paycheck Protection Program loan, there is still an opportunity to do so. The program actually will expire on midnight, June 30th. So that leaves about a week for anybody that has yet to pursue one of these loans. There's considerable money available to support that effort. So in other words, the funding allocation that came out of the CARES Act was more than adequate to cover this, but it's a great opportunity, and it ties in with what we're going to talk about in terms of forgiveness. That is specifically that there's more flexibility built into the program at this point. So if somebody were to apply for a Paycheck Protection Program loan at this point, they're going to have a longer period during which to use the loan proceeds, and they're going to have a little bit more flexibility in terms of how they can use the funds. So let me talk a little bit about that. So as you guys know, and I appreciate the chance to revisit some of these things as we go through this kind of a journey, if you will, on these SBA programs. And as we've talked about in the past, this has been an evolving situation. When the program was launched, it was done so very quickly, and so as a result, there have been a lot of changes and evolution over the course of time since when PPP loans first became available at the beginning of April. So we've had more changes, and on June 5th, the president signed the Paycheck Protection Program Flexibility Act. And while some of the features of that act are going to be beneficial to people that are applying for Paycheck Protection Program loans right now, the vast majority of the benefit is going to be for people that already have Paycheck Protection Program loans outstanding, and will ultimately either be working to spend those funds or apply for forgiveness of their Paycheck Protection Program loans. So specifically, let me talk a little bit about what the Flexibility Act did. When the Paycheck Protection Program, PPP, was first launched, you guys might recall that it had a couple of pretty hard and fast parameters around it. Number one was that in order to achieve loan forgiveness, borrower needed to use at least 75% of the PPP funds for payroll or payroll-related costs. The other 25% could be used for things like utilities and rent. Additionally, when the program was first launched, borrowers had a very finite amount of time during which they needed to use the funds. And that period of time was 8 weeks. So 75% for payroll, 8 weeks to use the funds. And then if there were any monies that ultimately were not forgivable, for example, maybe were a situation where the borrower was unable to rehire, or maybe use the money for something more for utilities and rent than the typical 25%. There's possibility that some of the money would not be forgiven and would become a loan, essentially programmed out in the initial phase of the program over 2 years. What the Paycheck Protection Program Flexibility Act did, in addition to extending the period of time during which the money can be used from 8 weeks out to 24 weeks, and extending the or changing the amount of money that could be used for things other than payroll from 25% to 40%. So now only 60% of the funds need to be used for payroll. It also extended the maturity of the loans that would be required in the event that there was money that was not forgivable, from 2 years to 5 years. So kind of three big things there. Extension of the time frame during which the money can be used, reduction of the proportion of money that needed to be used for payroll purposes, and extension of the maturity for any monies that needed to be programmed out as unforgiven and had to become debt. So there were additional features of the Flexibility Act also that I think are very beneficial, really with an eye toward maximizing the number of businesses that are going to get full forgiveness of this debt. First of all, I want to say, in terms of the forgiveness process, there are now 2 different application formats, and one of them I think has an encouraging name because it's referred to as an easy form, which kind of sounds like the IRS, but essentially it's a streamlined approach available to small businesses to seek forgiveness. The original forgiveness application document, I think we talked about it a little bit before, was rather daunting. It was about 11 pages. The easy form is, I believe, either 2 or 3 pages. But built into this whole process that wasn't really defined in the beginning of the Paycheck Protection Program is that there are a lot of what they call safe harbors for business owners. Safe harbors that are going to allow and really facilitate full forgiveness in a lot of cases. So one of the new safe harbors, Joey, that I think is really promising and encouraging has to do with the reality of what's kind of been happening with a lot of businesses, particularly in our area, that simply have not been allowed to reopen at a level that would allow them to achieve the intent of the program as it was originally envisioned, which was to rehire employees. So we've got a lot of businesses around here that have been subject to shutdown orders. They might be starting to re-engage into different phases of reopening, but they still have not been able to operate at anything close to what would be a normalized level of activity. That whole notion is in and of itself what would be called a safe harbor. So in other words, what I'm saying is that if somebody got a Paycheck Protection Program loan back in April or May, they use up all their funds eventually, but they're never able to rehire employees to the level that they were at before the COVID-19 situation. they're going to be in good shape as far as loan forgiveness if they were subject to the adverse impacts of all of these different shutdown orders, or even indirectly impacted by that. That's going to be a way or a basis for businesses to essentially go through the forgiveness process and come out in good shape without having necessarily achieved the original intent of the program, like I said, which was to rehire people to the level of employment that was in place before the COVID-19 situation. So as these rules keep evolving relative to the forgiveness process, I just want to say that they, in my view, are all intended to simplify the process and to optimize the outcome for small businesses. I think you would agree with me if you guys get a chance to look at the forgiveness application documents. They're available on the SBA website, by the way, as well as the Treasury website. And maybe I'll go ahead and stop there for a minute, Joey, and we can talk a little bit more about the actual process through which a PPP applicant or recipient is going to sort of initiate this forgiveness exercise. So thanks.
No, that's a perfect transition, because we want to make sure that we can hop over to Aaron. So Aaron, with the banking perspective and procedures, business owners are going to be in the need to apply for the PPP loan forgiveness through their banks. Do you have that additional criteria information to be able to share to make sure that business owners are able to get their loans forgiven?
Absolutely, yeah, and keep in mind the information is always being updated and changed, and obviously the financial institutions are putting the necessary tools in place to be able to take the forgiveness applications, because the borrowers for the Paycheck Protection Program are going to request forgiveness directly through their lenders. So as Mark said, the application is available on the SBA website, and it is a great idea to go look at those documents now and really understand what you are going to be expected to be able to gather and provide for your financial institution to request the forgiveness component. But know that your financial institution's process may vary. I can only speak for our experience at Bank of America. It'll be a digital process, for example, basically utilizing the information from the SBA in a similar online format to the application process in the first place. And I imagine most other financial institutions will probably also mirror a similar process to their application process to really ensure that it's a streamlined and smooth experience for the person that's applying for forgiveness. Now, as far as what's required, really there are going to be a couple main components that are going to be visible on the Paycheck Protection Program application on the SBA website and should be mirrored on your financial institution's application forms as well. But really it is the forgiveness calculation, which there's a worksheet in the SBA documents that will show you how to calculate what you're eligible for forgiveness for. There will be a section on your representations. So, confirming that you're seeking the funds, you use the funds in good faith as intended for the right purposes, and that you understand that, if anything was fraudulent on the application or it's found to be such, that you're responsible for paying back those funds. And then there's also going to be a schedule. It's a PPP Schedule A, which really walks you through, and that's kind of where you get a lot of the information for forgiveness, that walks through some of the various forms that you need and the information needed to be able to complete that worksheet for forgiveness calculations. Those are really the three required documents. There are a couple optional documents. There is a worksheet that helps you out with Schedule A that kind of walks through taking your information for all of your employees, what their average compensation is, what their average full-time equivalency is. So for example, if they average 40 hours a week, they are 1 full-time equivalent. If they average 20 hours a week, they are 0.5 full-time equivalent. And that's important to know, because one of the components of the Paycheck Protection Program, short of the safe harbor guidelines that Mark mentioned, is that the intention is to ensure that those payroll levels, the employee levels, are brought back up to a point that they were kind of pre-COVID. So it's really important to be able to have that documentation. Now, from a process standpoint, to make this as easy as possible for you, and for your financial institution, because obviously you want to make it easy for them as well to ensure that things go smoothly and quickly in calculating the forgiveness. It's important that you really ensure that the required documents are filled out and accurate to the best of your ability, and that you're not uploading documents that aren't required. You know, your actual payroll records don't need to be turned in, but you can use those on your worksheets to help you fill out the application to get the information ready. So just a couple examples to keep in mind, that you want to make it as simple of a process as possible. Now, once your financial institution opens for taking the applications for forgiveness, your financial institution has 60 days to ensure that everything is completed per the SBA's guidelines for that forgiveness application. And along that process, they may reach out to you. So it's important to make sure that all of your contact information is accurate and up to date. And I would assume at this point in time, if you received the Paycheck Protection Program funding already, it has been, and your financial institution has been able to get in touch with you to be able to help you sign your promissory note and the related documents to it. But if anything is missing, your financial institution will reach out to you. They'll be responsible for connecting and collecting any required documents needed to be able to complete the request. And then within 60 days of receipt of those documents, they will send that request to the SBA to validate how much of your request will be eligible for forgiveness. Now, the SBA, upon receiving the application for forgiveness, has 90 days to make a determination on what that forgiven amount is going to be. They will then communicate back to your financial institution to let them know whether it is full forgiveness, partial forgiveness, or if there is no forgiveness eligible. So, you know, the answer as far as what is left that may be forgiven or may not be forgiven, that may be converted into that loan at 1%, amortized up to 5 years, as Mark mentioned, will really be determined based on the SBA's guidelines, the documents that you provided, and you know, their ability to be able to utilize the information you provided to make a decision. So again, that's why really the best thing to do right now to prepare yourself for it would be to review those documents, the applications now, ensure you have the information ready to go, so that at the point that your financial institution begins accepting applications, you can fill it out completely, accurately, and smoothly, and it becomes a much quicker process. For example, for somebody that applied in early April, for example, or was funded in April or May, received their funds, and they are applying for forgiveness in July because they've utilized their funds, they did it for the purposes intended, everything was covered per the SBA's guidelines, they submitted to their financial institution, and maybe in those first month or so, the financial institution's process is relatively streamlined, and they can submit it to the SBA within a week or two because no additional documentation is needed and there's nothing needed to wait for. Let's say at that point in time, we're looking at maybe August, September timeframe, when the SBA then is able to, if the volume is low enough, respond within another 1 or 2 or 3 weeks, and you could potentially get your answer on forgiveness as quickly as, you know, the end of September, really. In other instances, say you've taken the 24 weeks of eligibility time to be able to utilize your Paycheck Protection Program funds and waited till maybe the 14, 15 week period of time, then you take another 6 or 7 weeks to be able to collect your documentation, get it into your financial institution. If documents are missing, if anything is not filled out correctly, or if there's additional validation needed, your financial institution may reach out to you in that time period. It could, again, take up to 60 days before they finally get everything ready to go and submit it to the SBA. But now we're talking about really looking at, you know, the October, November, December timeframe, depending on how long that process took. And now the SBA is going to take 90 days, up to 90 days, to be able to make a determination on forgiveness. And if at the end of the year, we have all of the hundreds of thousands of applications, millions of applications that are being requested for forgiveness at that point in time, and the volume is significantly higher, it could take the full 90 days for the SBA to make a determination. 90 days could elapse, and maybe they've not had the chance to make a determination. And at that point, either way, the financial institution is going to reach out to you and let you know what that forgiveness eligibility is going to look like. But we could be talking about January or February. So it's really a difference of how quickly you get your documents in, how accurately they're completed, and did you follow the guidelines on how those funds are to be used so that you're eligible for the full forgiveness amount. And then from there, it'll really be up to the SBA to determine if it meets the guidelines as such, communicate to your financial institution, and then they will ultimately let you know what the next steps will look like. Either the funds are forgiven. If it's partially forgiven, you'll have a loan for the remainder of the amount, or if there's no forgiveness, then the entire amount will be turned into a loan.
Thank you, Mark. Mark went ahead and actually posted a link within the chat feature for the forgiveness applications where they're located at the Treasury site. So that's there. We'll make sure that we go ahead and get that copied and pasted over to the Facebook site as well, so folks can be able to have access to that. We do have a lot of Q&A coming into our boxes, so I want to make sure we jump into that portion of our hour. So Tareya, what is our first question from our viewers?
Hi, yes, from Susan, we have a question. With the extension of time to use the PPP funds, would it still be forgiven if payroll still drops less than 25% of what was pre-pandemic?
Right. You want me to start with that, Aaron? Take a shot. And
yep.
You can add in.
You may be the pro on some of those.
Yeah. So great question. So there initially was a quote safe harbor if you achieve up to 75% of payroll during what we would call the covered period, which was originally the 8 weeks. Now it's up to 24 weeks. But as I kind of described a little bit earlier in my opening comments, there are other avenues or other ways for people to achieve that forgiveness, even without necessarily hitting that 75% of returning employees. And the big one that I believe is the perhaps the most beneficial feature of the Flexibility Act is that it allows businesses to assert or rely on the fact that they were not able to return to their normal level of operation because of requirements related to trying to contain the COVID-19 situation. So in other words, in the state of Washington, for example, with the different shutdown orders, starting from the governor's office, through the Department of Health and the different county levels and so forth, all of those things have impacted a massive array of different kinds of businesses, particularly probably in the retail and the hospitality sectors. Those folks will be able to easily make that certification that they were not able to return to their pre-COVID level of activity because of these requirements imposed on them, or even indirectly impacting them. Those might be, for example, it seems to me, situations where people just simply were not coming out. There was a period of time there where we had, it seemed to me, kind of a shutdown order overall, where people were being encouraged, not maybe necessarily enforced, but encouraged to not be out, conducting normal day-to-day activities. All of those things have impacted all wide variety of different kinds of businesses. And so that's a long way to answer the question that could be the basis of loan forgiveness, even if that business didn't achieve a return to full employment or even the 75% level of employment. Does that make sense to you, Aaron, based on your understanding?
Yeah, it is, and I think it's important to note that the required documentation that you're gonna submit for the forgiveness, it in your representations, you're going to attest that the information you're providing is true and accurate. So you're not going to need to submit those documents per se that show I made an offer to my employee and they weren't able to come back, or I wasn't able to get my business back open again, and here's my annual sales compared to last year. However, it is a best practice idea to keep those things on hand so that you have them in the event that there is any questions or that you need to validate that request. But the worksheet does walk you through some of those different scenarios depending on which avenue applies to you. So again, while you don't need to have those documentations or something on paper that shows that, know that the entirety of the PPP is really it's a good faith effort in the intent to get businesses back on their feet, get their doors open, get employees paid. So these safe harbor guidelines really provide for a lot of that flexibility in requesting the forgiveness. And as long as you're submitting the documentation for your request for forgiveness in truth and in accuracy to the best of your abilities, and you've got documentation that you are keeping yourself that shows that and can validate that in the event that there's a question about it, then you should be just fine on requesting the application or requesting for forgiveness.
Fantastic. Thank you to the both of you for those answers. We have a question regarding the forgiveness. If we report a higher forgiveness number than the loan amount, would that pose an issue, or would it be beneficial to report the higher number if all of the documents are accurate?
So I can at least speak to the forgiveness calculation document. If you pull up the documents, it sounds like Mark has shared, you'll see that there's kind of an A, B, or C scenario on, I think it's lines 9, 10, and 11, or 8, 9, and 10. But basically, you're going to determine, your amount of your payroll and whether or not it was reduced compared to what it was back in February 15th. Your PPP loan amount or your payroll costs, divided by the appropriate amount compared to your non-payroll costs. And then really it's going to be the lesser of those that you're going to be eligible for forgiveness on. So if you have used more than what you're allocated for in PPP and they were covered expenses, but you didn't quite have the PPP funding for that, should not create any kind of problem. And you should be able to resolve that through completing that worksheet when you're doing your application.
Regarding full-time employees, there's been an update with their requirements. Could you go over what the latest requirements are for full-time employees?
Mark, I'll pass that one to you.
Yeah, thanks, Joey. So again, depending on the situation, what we had initially was this 8-week period. It's more or less during which folks needed to be able to bring back, rehire employees to the previous level, kind of the pre-COVID level. That was the premise of the original deal. But then within that, we had this 25% safe harbor, if you will. So in other words, that the requirement was that they would have to come back or bring back employees up to 75% of the headcount that they had prior to the COVID situation. So fast forwarding up to the Flexibility Act, there is now 24 weeks during which not only the money can be spent, but also during which the employer can work on getting back to that pre-COVID level of employment. And in a ideal situation, they're going to be able to do that. They're going to be able to say, hey, we had 100 employees on January 15th and in January 15th of 2020 and on December 31st of 2020, which by the way is the last day of the allowable covered period under the Flexibility Act, we got back to 100 employees. And in addition to that, we use 60% of our money for payroll and 40% for these other purposes. They're going to be totally forgiven. And that's great. That's wonderful. That's the ideal situation. But again, back to this question of, Okay, what if they didn't? What if they didn't get back to that level? They didn't get back to their 100 employees. They got back to 80. Maybe it's a restaurant, a small chain of restaurants, and they simply were not able to reopen and at a level comparable to where they were in January. You know, the most they're able to do right now is probably 50%, I think, in King County under the phase 2 situation, maximum. That would be a way then that business could justify, if you will, not returning to full employment and still get the forgiveness because they were subjected to these municipal and governmental orders regarding shutdowns and things of that nature. They can still have spent the money, only now it's not 8 weeks. They can have spent the money over 24 weeks. So spread it out in a more reasonable fashion. They can spend less money on payroll, more money on rent. In my restaurant case, maybe that's a substantial piece if you had a chain of restaurants. So ultimately, they're going to get the benefit of this program, but they're not going to have the requirement to have returned to full employment. They're going to be able to rely on those safe harbors that we talked about. The most significant one that I think, at least in the case of the hospitality sector, is going to be related to the COVID-19 shutdown orders and the inability, to in fact even start to return to full capacity.
Just a quick clarification with talking about the 24-week period. Do business owners, do they need to wait to the end of the 24 weeks to apply for the forgiveness, or can the applications be made as soon as the money is used?
Right. That's a great question, Joey, and it's funny because it's been the hot question. Ever since this stuff came kind of out publicly here a week or a week and a half ago, we've gotten the question probably 10 or 15 times. There was just brand new rule publication last night that came out and talked about this very issue. So the bottom line is this: what we want to encourage people to do is that when they're done with the money, whether it takes 10 weeks, actually so a lot of people are done with their 8 weeks and they're done with their money. They need to go ahead and initiate the process of forgiveness with their lender. But if you got somebody that's it takes them 13 weeks now to spend all of their money, they don't have to wait around for that 24-week time frame to have elapsed. They should and can initiate the forgiveness process with their lender right away. They want to get the debt off their books. They want to get this whole matter sort of resolved. And I think as Aaron might have alluded to, that I think ultimately it's going to be in everybody's best interest that we don't have 4 million of these applications going in at the same time at the end of December. So the guidance is, when you're done spending the money, you can initiate the forgiveness process. You do not have to wait for the conclusion of the new 24-week covered period.
Perfect. Thank you for clarification.
Yeah.
Drea, let's make sure we knock out those Q&As coming in. Let's jump back over to you.
You bet. Regarding Mark's response that you had just given, Mark, isn't it the rehire date to full FTE count as of 12/31/20? Just need some clarification around that.
Right. So again, I think in a lot of these cases, people are going to be able to rely on these safe harbors that I'm talking about, and so the idea would be that they would simply not have to wait around to try to achieve full constitution of their workforce. That they can, in fact, if they're able to adequately complete those application documents and make the appropriate certifications, they can do that prior to December 31st.
Okay, good to know. I have a question for Aaron. Aaron, in the applications for forgiveness, who will determine whether a loan is forgiven? Will it be an automated decision based on documentation provided, or will it be a staff member at, let's say, Bank of America or SBA? And is there a process in place for appealing a decision?
That's a great question, because certainly through going through the application process for Paycheck Protection Program, there are human beings that are processing applications. I can tell you, at least, even myself personally process many of them. But as far as the determination on what is eligible and what is not eligible, Bank of America and every other financial institution out there that is providing the Paycheck Protection Program loans is operating utilizing the same guidelines. So we all have the same rule book. We're all operating under the same rules that exist for everybody. So while there are humans that are helping to move things along and we try to automate as many things as possible, ultimately the guidelines are based on the documentation that are provided. Now, from a revision standpoint or appeal standpoint, that, I think, to my understanding, maybe Mark can weigh on this. So I was even researching this a little bit this morning. Is say, for example, if somebody, because applicants that receive their loan prior to June 5th have the ability to use the 8-week time frame rather than the 24-week time frame. So if somebody applies under the 8-week guideline and is declined, can they reapply under the 24-week guideline? I don't know the answer to that just yet. But certainly with every financial institution, if there is an error that's made, the financial institutions are going to work in their best faith as well to be able to ensure that the documents reviewed under the SBA guidelines and that they're completed as accurately as possible. But in the event that a mistake is made, most financial institutions will have some sort of remediation process in place to ensure that it was corrected. Now, if we're at the end of the time frame, back to Mark's comment about I think we both mentioned this, better to apply sooner and cleaner and neater as possible, because if we get to the end of the process and the SBA is full reviewing millions of applications and there is a decision that has already been made that has been determined by the SBA based on the documentation provided, and you request an appeal, it may or may not be reviewed depending on the SBA's capacity, your financial institution's capacity to be able to go back and reappeal it. But understand that the applications, they're all reviewed with the same guidebook. And in fact, at least from the one that I've seen of what Bank of America's process is going to look like, it's going to be very similar to the SBA application that's available online right now. So as long as the documents are provided and updated and documented correctly, that should ensure a fairly accurate and smooth process in ensuring that you're forgiven for the proper amount based on the SBA guidelines.
Excellent. I have a follow-up question for Aaron. In the applications for forgiveness that have been processed so far, what are the common areas where mistakes are being made that require follow-up?
That's a great question, and I don't have an answer to it yet because we haven't started processing applications for forgiveness yet. With the guidelines rapidly changing, with the Flexibility Act being signed into place, we at least for our part anyway, and I think this is mirrored at a lot of financial institutions right now as well, are still building the backbone to ensure that we're able to create a very smooth and seamless transition or a process for our clients. PPP, when you think about the fact that even just 3 months ago was not even a part of our vernacular, and now we have literally lent billions of dollars to small businesses across the country on an infrastructure that was created across hundreds, if not thousands, of financial institutions across the country, and turned around in a very short time frame. It's an ever-evolving process. We want to make sure that now that we've at least got a little bit more time with the forgiveness window being extended, that we're able to ensure that there's a proper backbone in place. So while I can't speak to current applications for forgiveness that have been processed already, I can at least speak to the application process up front, because I would imagine some of those pitfalls would probably also apply in the forgiveness component. Some of the most common things that we saw, though, that resulted in delays or inaccurate information was really, documents that were being uploaded that were not required. And this is accurate. I mean, if I can, sidebar and also just say for small businesses out there, if you're speaking with a financial institution looking for any amount of lending, if you provide the correct documents the first time and only the correct documents, it becomes a much smoother process, because when your loan processor is looking through 20 or 30 ancillary documents that are not necessarily required as a part of the process to try to find the accurate information, that can sometimes lead to errors being created, because maybe the important information you had was on the 23rd document and it didn't get reviewed the way that it should have. So that's one thing. Understand the process, look at the documentation that's required and submit just the documentation required, but have everything else ready in the event that more information is needed. Other than that, I would say, read every document completely, thoroughly, and accurately to ensure that you're answering it correctly and filling out the documentation correctly. Some of the common mistakes seen on the Paycheck Protection Program applications were sometimes just simple calculation errors. If you're taking your monthly payroll amount and multiplying it by 2.5 times to reach what your maximum loan amount should be for the Paycheck Protection Program, you shouldn't have a monthly payroll amount of, say, $15,000 a month and a maximum loan amount in the next box of $100,000, because the math doesn't quite add up. And sometimes at that point, the lender has to default to the information that you've provided to ensure that the information is processed as quickly as possible for you to ensure that you're able to get in under the guidelines of the program. So those are really the biggest things: is review everything for accuracy, submit the documents that are requested, and really keep it to just the documents that are requested, and any optional documents that the SBA has deemed, which is the worksheet and the demographic information, which does not have to be submitted, but certainly can be. But if you keep it to those two things, that should improve the process and how smooth it goes for you when forgiving requests for forgiveness.
To touch base on the economic injury disaster loan, if someone received the EIDL, does that get deducted from the PPP for forgiveness?
Great question. And it's coming up a lot right now. So the EIDL, just real briefly, Joey, that's our economic injury disaster loan program. These are the loans that were made available shortly before the PPP program. Loans made directly by SBA. Anyway, we had several million applications for that program. And I think we talked about in the past that there was a second sort of feature that was added as a result of the CARES Act, something called a cash advance as part of the EIDL program. So as far as the interaction between the EIDL and the PPP program, for the most part, it's really just the cash advance. So in other words, that if somebody has a PPP loan and they did receive a cash advance, they have to disclose the amount of the cash advance, and that dollar amount is going to be subtracted from the forgiveness amount of the PPP loan, because of the fact that there's not supposed to be sort of a duplication of benefits in this case. So if somebody had a PPP loan forgiveness of, say, $50,000 and they had a $5,000 cash advance, they'll ultimately have a net PPP forgiveness of $45,000. The only other kind of interface or interaction between the EIDL program and the PPP, it's a very rare situation where if somebody happened to be lucky enough to get an EIDL loan dispersed before April 3rd, that money is supposed to be refinanced if they got a PPP loan. So in other words, the PPP loan would actually be dispersed and used to pay off the EIDL loan. We just got guidance on this, but I don't think there were very many of those at all, because it took a tremendous amount of effort to get our EIDL program kind of up and running. And I would just be very surprised to hear of anybody that got an EIDL funded that quickly. But if there are such cases, the idea is that if they in turn got a PPP loan, the PPP loan is supposed to be used to refinance the EIDL.
Okay, and I have a question coming from one of the audience. Has there been a decision around taxing PPP loans as income? If the loans are forgiven, is that considered taxable income for 2020?
I believe that it is in the act, in the original CARES Act, that it is not going to be considered income.
Excellent. Okay, one other question here. It's a different subject. Option 3 on the 3508 easy form says unable to operate to the same level as pre-COVID based on HHS, CDC, and or OSHA requirements. Does any other work or customer safety requirements related to COVID-19 allow for state, local requirements to be relied upon for forgiveness?
Take your pick.
Mark, I was hoping you were going to answer.
No, I was. It was weird, and then my screen went away, and I thought I dropped off, and I thought, oh, that's good timing.
It wouldn't be opportunity to have you with us unless something like that happens. So we're happy you're still here.
I believe that is. I frankly, I think there's probably a little bit of, we need to do a little bit of digesting as far as what that is actually saying, because I feel as if I come back to that restaurant example, and I think you have to probably trace where those requirements come from. Is as far as shutdown orders, as far as return to work at 25%, 50%, or whatever. I think that if you did that, you would find out that they probably originated at CDC, so it's probably based on CDC guidance. So if I kind of understand the question, I'm excuse me, if I understand the question, it is kind of what organizational guidance has to be relied on to make that case that the business wasn't able to return to its full level of operation. And I guess what I'm saying is I think that ultimately at the heart or at the root of all of these shutdown orders and the different guidance as far as social distancing and all these different things, we're going to be able to trace it back to HHS, CDC, OSHA, if that makes sense, even though it seems like in some cases some of these orders are coming locally. I think that they originate at those federal levels.
I have a calculation question regarding for the forgiveness. If an employee had voluntarily quarantined themselves and it's not set to return to work until later on, and as the phases in reopening happen, is the employer required to count that person in their calculations?
So yeah, I'm just trying to kind of mull that one over a little bit. So I think that would potentially be one of those safe harbor types of situations, Joey, where maybe the offer was made, but the individual was unable to return. So I think there's a couple different employee-related safe harbors. One is that the employee simply it feels it's unsafe to return. In this case, it would be unsafe for, you know, them and obviously the customers and other employees. Also, there's a safe harbor if an offer to return is made and the individual simply doesn't accept it. They prefer to be on, for example, the enhanced unemployment. So either of those cases are not, or I should say, neither of those instances are going to penalize or work against the employer as far as compliance with what we're trying to do with the PPP loan.
What about healthcare? Are healthcare benefits eligible for forgiveness?
So,
Aaron, do you want to take a shot at that?
Yeah. So, I mean, I can speak to that in terms of if you included healthcare benefits in your application for the Paycheck Protection Program, then it will also marry over into the forgiveness application. So keep in mind when you're calculating your monthly payroll costs for the application originally, you were able to include not just the cash compensation of the employees, but also benefits paid towards medical benefits as well as retirement plan benefits for your employees. If you included those in your application for the Paycheck Protection Program, then you would still continue to carry those over for your application for forgiveness. And there's actually a component on, I think it's on the worksheet, on worksheet A, that allows for that, where you state the cash compensation, the amount paid for employee benefits, and the amount paid for retirement benefits. So it is a part of the calculation and it is eligible for forgiveness. And that counts towards your payroll costs, not your non-payroll costs, which is that other 40%, which is more things like interest on mortgage, utilities, rent payments, and things along those lines.
Let's touch on sole proprietors. So in their cases, how does the business owner show payroll expense? You know, how do they prove that those funds were used for payroll in order to receive, to be forgiven? Can they simply pay themselves?
Yeah, that's Mark, I don't know if you've got more information on that than I do. I can only speak to from the application standpoint for sole proprietors that file a Schedule C are paid by 1099 miscellaneous. We utilize per the SBA guidelines their net income from their operations. If they have no employees and they just pay themselves, it's line 31 of their Schedule C. Now, as far as the forgiveness component, because they're not going to have tax returns filed, I don't know what that's going to look like from the financial institution standpoint and the application standpoint. And at least as my understanding goes, I don't know what that looks like from the SBA guidelines. It is a good question. Mark, do you know more on that?
Yeah, no, other than, you're right, though, the whole sole proprietor thing is a bit of a different animal as far as both the application and the forgiveness process. But, I'm imagining it could be something like some type of financial statement that would indicate a net. So in the case of a sole proprietor with no employees, what we're really talking about, as Aaron alluded to, is when they make the original application, we're looking at the Schedule C, the line 31, which is the net income essentially. So then really what it's going to come down to is, and they're going to, so it's net income divided by 12 times 2.5. That's their maximum loan amount. So in order to substantiate that was, in fact, I think it's probably easy to do. They would simply need to, one way or another, demonstrate that they paid themselves, right? That's what we're really talking about there. So yeah.
Perfect, thank you. We are at the top of the hour. Just wanted to make sure that we had a chance for each of you, if you had any final words or comments to get out to the folks that tuned in today. Aaron, we can go ahead and start with you.
Well, first of all, thank you very much. And for me, I've worked with Bank of America for the last 10 years, and I've been working with small businesses for the last 5. And so, my heart goes out to every small business owner out there and what's going on in the current environment with the inability for you to be able to have your doors open and really maintain your normal day-to-day lives. You know, we're all under the quarantine and the stay-at-home orders, but business owners have really been affected in a way that many of us can't always understand. So, you know, please, you know, please do apply for, if you've got the Paycheck Protection Program, apply for forgiveness, work with your financial institution, you review the documents so that you're prepared ahead of time. They're out there. The SBA has just updated them as of last week. Understand what's going to be asked of you to complete and provide to your financial institution. And as we talked about, at the point that you feel that you've utilized the funds to their fullest capacity to allow you to get the bulk of the funds forgiven, if not all of them forgiven, apply sooner rather than later, because I imagine there will be some slowdowns in the process as we get later on into the year. But certainly partnering with your financial institution is going to be the best way to be able to ensure a smooth process for you. And thank you for what you do.
And Mark?
Thanks, Joey. Yeah, I think the main thing is, while this has been a not the easiest process, you know, it's been a lot of stop and start and somewhat cumbersome and complicated at different times. I think it's important to understand, though, and I really believe this is that so there have been 4.7 million of these PPP loans approved for about $520 billion. You know, the program was designed, I think, with really good intentions, and I don't believe that it's intended to now turn around and be a kind of a gotcha situation for business owners. I really believe that some of the things that we're seeing with the Flexibility Act, the newer, more clearly defined ways that people can have a safe harbor from the employee requirements are really going to be beneficial to small businesses. And I really believe that the vast majority of the folks out there that have gotten these PPP loans are going to achieve full forgiveness. I also wanted to just maybe put in a quick plug for a couple of other organizations out there. I know that we've been talking about financing and funding and capital for quite some time, but I know that also as businesses re-engage or contemplate, you know, returning to full operations, that there may be a need for I think you hear the word pivot a lot these days. There may be a need for businesses to pivot, you know, their model or how they do what they do. I want to make sure that everybody in the audience is aware that there are some organizations out there that are really in business to support them. And not just SBA as a broader umbrella organization, but a couple of very specific groups that we work with that provide one-on-one business advising to existing business operations. One of which is the Small Business Development Center, WSBDC.org. This is a network of about 30 different business advisors that are situated around the state. There's several of them in the greater Puget Sound area. And this is what they do. They work with businesses to kind of strategize and develop solutions to challenges. Take advantage of that. The other is that there's a network of women's business centers as well. So if you simply were to Google something like Washington State Women's Business Center Network or Women's Business Center Seattle, Women's Business Center Washington, these are similarly sort of focused organizations that are primarily working to support women business owners, but they're doing the same kind of thing. They have the capacity and the ability to really provide meaningful one-on-one guidance and direction and collaboration and mentoring for businesses. And this is, it seems to me, a time when those resources are going to be particularly valuable. So I just want to make sure that people are aware that they're not out there on their own, and that there is another sort of opportunity out there for assistance. And while again we've been very focused on funding, that things like business operations and strategy are equally important, and that there are organizations out there to support people to that end. So thank you.
Well, I definitely agree. I think that the word of the year is going to be pivot. So we definitely appreciate both you, Mark, and Aaron, for sharing your knowledge with us today, so everybody can properly pivot to remain successful, as we move into the end of 2020. And on behalf of GSBA, we'd like to thank everybody else who did tune in today as well. We appreciate your viewership. GSBA does continue its efforts on our COVID-19 emergency resource page, which is located at thegsba.org.